Well, the market continues to just go crazy. And I know you're thinking about that, and so am I. So this week, what we're going to do is we're going to go through the market statistics so you understand where we're at right now and possibly where we're going. Hey, just real quick, so I don't waste any of your time, my name is Hudson. I am a real estate agent here in the Las Vegas area, and people always wonder if they can reach out to me. Yes, you can. Information is in the info tab. Call, text, or email me. Better yet, down below there's a calendar link, and by getting on the calendar, you'll be assured that you are getting on at a good time where we can have the time to discuss what you need. Okay, we all know the market has gone just a little haywire nationwide. Not only nationwide, but here in the Las Vegas area, it's a little bit nuts. So let's start just going over the numbers. That way we can kind of figure out where we are right now. And most importantly, we can kind of hopefully see where we're going. And this can help you out as both a buyer and a seller. So let's go ahead and get into those numbers. Let's not waste any more time. So to start off, where are we looking? Well, here at Las Vegas, North Las Vegas, and Henderson, right now we have 9,621 total units available. Now, when you break that down into prices, right now the lowest priced place, not including manufactured homes, I pull those out, is $95,000. The high, some lucky person out there owns a $32,500,000 house. That's actually been sitting there a bit, and it may sit a little bit longer because not everybody has that much money to spend on a house. The average across all categories is $648,577, with the median being $450,000. Okay, now we get to the single family homes. This is where most people are really thinking about over the condos and townhomes. So right now there are 7,827 homes available, and you compare that against last month where we ended up at 8,121. So this is actually a little bit good for folks, especially as a seller, because you have even less competition. But a lot of that, these people are actually removing their homes from the market now because they're not selling. So days on market are starting to go up. So this is one of the things to consider. Now, for those single family homes, the lowest priced home in the valley is $175,000, with the highest priced home being that $32 million property. Again, lucky sucker, because I don't have 32 million laying around. But after going to an event last week, there's a lot more people than you can think about who have that kind of money laying around. All of the homes that are on the market, the average is $722,591, and the median, which is where most people are actually sitting around, is $489,500. Now, when we get into the condo and townhome market, currently there's 1,794 homes available, and compare that against last month where we had 1,849 homes available, which means, hey, there's fewer of those also. The low price on that one, $95,000 for condos and townhomes. The most expensive one being $13,500,000. I would love to see that one, and maybe we'll flash it up here for you so you can see it too. The average is $325,498, with the median being $285,000 for condos and townhomes. Now, what does that really mean? That's what's on the market. A lot of that is dreaming, and one thing to consider, week over week, about 1/4 of all the homes on the market have a price reduction. So when the dreaming ends and the reality starts, and before the nightmare begins, hopefully the sellers get down to a point where their prices kind of match with the current reality. Because as of this taping, the Fed is meeting, as I'm doing this right now. This afternoon, they're going to announce the new rates. And all the crystal balls out there, say there's going to be another 75 basis points, which means you could drive interest rates over 8%. 8%. Think about that. Now that leads us into what has sold. So overall market for the month of October, 2,108 homes sold. The minimum being 95,000. Must be a twin of the one that's available on the market right now. The maximum price of a single family house that sold was $8,560,000. The average was $492,000, with the median being $410,000. Remember, that's all homes sold. So now let's get into the all important again, because everyone, your first choice for most people is going to be a single family home. So single family, 1,640 sold. Well, again, every month we have fewer and fewer homes sold. Last month, 2,030 sold. So that's almost 400 fewer home sales than the previous month. It's actually amazing me right now, I'm going to be very honest, that prices have stayed as high as they have, especially with interest rates and the shrinking market. And of those, the minimum single family house to sell was $139,000. Let's see if we can flash that up for you. And the max is that $8,560,000 house. The average was $555,053, with the median being $445,000. So here's where we have to start digging into things. Remember, last month, the median price was $550,000, which means we have dropped another $5,000 on the median price of a home. And that's more important than anything else, is that median, because you got those $8 million, $32 million homes. It kind of skews things to the right a little bit. So right now we have 4.8 months of availability. So we are now tipped into a balanced market in theory, although we know right now buyers kind of have a little more control. And compare that against 4 months for last month. So even more months of availability. So expect the time to sell to continue to climb. So when you have a house on the market 2 and 3 months, that's the way it is. Big thing is, if you're a seller, do not play the let's see what happens next weekend game, or when someone gives you a suggestion on improving your position in the market, aka you need to cut your price. Do it and don't go, I just don't want to do that just yet. I'm trying to get the maximum I can for the house. Trust me, you're going to get the minimum that you can for the house playing that strategy. You need to play to win. As far as condos and townhomes, 454 sold compared to 524 last month. So even that market is being affected. We're like almost 80 off as far as prices go. Minimum was at 95,000. The maximum condo or townhome that sold was 920,000, and the average $277,359, and the median $266,000. And guess what? Last month it was $270,000. So $4,000 less in value this month. Now, as you notice, I combined condos and townhomes. That's because the board combines condos and townhomes. This way, I can kind of check my numbers against theirs. Keep them honest a little bit. But here we go. So let's go ahead and break down those condos and townhomes so you kind of get a better picture. So as far as condos go, 261 sold. The minimum price was that $95,000. The max was that $920,000. So the condo, you'll see in a second, had a higher sale than the townhouse. Average price $242,300. $348, with the median being $228,000. Onto the townhomes, 193 sold. The lowest one was $130,000. The highest one was $635,000 with a median of $324,000 with an average price of $325,000. So the average is actually lower than the median. So that's a little bit off a little bit. And right now we have 4 months of availability compared to 3.5 months of availability last month. So we just went through all of this. What does it really mean? So one of the things that flashed across my feed this morning, Opendoor, one of the major purchasers of homes in the country, they're laying off 18% of their workforce right now. And reason being, what's happening in the housing market. I did a live stream this weekend, and one of the comments on the live stream was someone purchased their home. It was Opendoor. It was either Opendoor or OfferPad. I couldn't remember. And it said that when they sold it, they lost $50,000. So that person got out near the top of the market. And this is what I'm telling you. Zillow has stopped buying homes. Opendoor is laying off almost 20% of its workforce. The investors are out. 6 months ago, they would give you full price. Now they're giving you not even pennies on the dollar. You should see some of the offers from these cash investors now. They're getting nuts. As a buyer, what you need to start doing is making sure you are asking for those closing costs. Any seller who isn't going to give you closing costs is making a big mistake, especially if they have the equity. Have your real estate agent look into the equity the person has. You need to leave them with fair money and everything else. And there's only certain amounts that you can actually ask for in closing costs. But the big thing you need to be looking for is an interest rate buy down. Right now, they're saying, not too long ago, it was like, oh, wait a year, and it'll come down. Then 2, now it's 3. So fortunately, most of the banks have gone into what's known as a 3-2-1 buy down. So we're going to pretend that by the time you lock in your rate, it's going to be 8%. Don't know what it's going to be. I didn't stay at Holiday Inn Express. Okay, let's say that it is 8%. You get the seller to pay for a 3-2-1 buy down. Well, your interest the first year is only 5%. Interest second year, it goes up to 6, and then it goes back up to that 8. Hopefully, rates have changed by then. The Fed has gone like, oh my goodness, we've strangled the economy too much, and they lower those interest rates, and it affects the bond market, which lowers your interest rates for mortgages. And let's say you're really lucky, you get in and the normal rate is 7%. Well, now you can do 4% for first year. That's going to help out a lot. 5% for your second year. So let's pretend that you can get a 7% interest rate from some lender. Well, if you do a 3-2-1 buy down, first year is only 4%. That's not too far off from the bottom of the market. So you got a fairly good interest payment there, or mortgage payment. Second year, 5%. Third year, 6%. By the fourth year, hopefully we get back to where we need to be. So those are the strategies. This is for sellers. You need to start thinking about it. Be prepared. Whatever the max for that loan is, be prepared to possibly pay it. And this is a plug for you. The one that you can give the lease to, or is required to give the lease to, because each one has a different amount, from 4 to like 6%, is a VA loan. I would be out there looking for VA loans. Sellers, trust me, like here in the Las Vegas area, there's like 36,000 veterans, about 4,000 active duty military. They want to buy houses. If you bought a house more than 8 months ago, you're at 3% interest. 3. All you got to do is offer that out. So all these people who are lowering their prices, you can offer out to veterans and try to market to veterans. Hey, you can take over my loan and get 3%. What kind of fool is going to turn that down? I'm sorry. Yeah, there are going to be some fools who are going to still want to lowball. You still want your 3%. But here's the thing, as a VA loan, when they take over your loan, you get to use all of your loan again. And if you purchase at the right amount, you may still be okay. Anyone can assume that loan, but yeah, you do lose your full VA benefits. But let's say you bought a $300,000 house. Well, you still have about $400,000 or $500,000 in benefits, according to what state you're in. Talk to a lender. What if your next house that you're moving to is $400,000? You're selling a $300,000 house. Everybody else is cutting their prices, and you can get I don't know, 350, 325. That's a lot better than any interest rate that they're going to find out there, unless they get a 3-2-1 buy down, and it still won't be as cheap. And it's going to be easier to do, and you're not going to have to fall for the 3-2-1 buy down. When I say fall for it, I mean you're not going to have to go do it and take that money out of your profits. Think about that one. Put it under your hat. I hope this has been some good information for you. If you found a little bit of value today, go ahead and hit that subscribe button. Click that thumbs up. Leave a quick comment, because that's how the YouTube algorithm works. And just to leave it off there, if you need to get in contact with me, my calendar link is below. You can get on my calendar or go to the info tab, call, text, or email. We'll get hooked up and get all your questions answered.